Let me also bring on board Krishna Kumar Karwa, Managing Director and Chief Financial Officer with Emkay Global Financial Services. KK, good morning. Thank you for joining us. KK, surely we have lost our way in last couple of days. What would you attribute this round of weakness to?
See, in terms of in the last 2-3 days, we have recovered. In fact, if you look at it in a way, where we were pre-budget closing, and again yesterday's closing is very, very similar. So whatever weakness was there post-budget, we have recovered all of that. But before that, yes, the markets have corrected, and for obvious reasons, which is a strong amount of domestic selling, which has been there, relentless selling from domestic institutional investors. So whatever FII inflows have been matched by domestic institutional selling and fresh issue of paper. So these are the factors which have capped the market gains, and we had a decent correction. More than that, also your breadth of the market has been very poor, and we have seen a lot of deep cuts in your mid-cap segment, so which has also impacted the market sentiment.
On the mid-cap end of the market, and does it seem like what we saw in terms of some margin calls getting triggered, funding issues with some of these mid-cap promoters, does it seem like at least for the interim it's done with because the market mood has now uplifted thanks to the global cues?
See, if you look at the mid-cap indices, I mean, they are where they were in September. So the correction, I mean, whatever uptick happened in the last 4-5 months, it's all corrected, and the indices have retraced all their gains. So typically, we believe that from these levels, your mid-cap stocks should give you a decent rebound. And along with that, yes, positive market sentiment and whatever weak holdings were there, maybe because of margins, funding, etc. So now they are out of the system. So there should be a uptick in many of the mid-cap stocks. But having said that, I think it's best to be very careful in mid-cap stocks as far as management quality and balance sheet quality is concerned. So I would assume that after the kind of deep cuts that many investors have seen in their portfolios on mid-cap stocks, they would be very, very selective. So only top-notch quality stocks should be the one which will see a positive uptick.
KK, but the mid-cap space has got decimated, and given the way what is happening to small-cap stocks, do you think in the near term premium for quality large-cap stocks will only increase? Because just about every fund manager I've interacted with, they are of the view that in the near term they want to reduce the exposure to mid and small-cap stocks.
See, what has happened is that as far as the inflows with domestic funds are concerned, they are very muted, or rather they have seen negative outflows itself. So, and typically investment in mid-cap, small-cap stocks comes from domestic investors, be it through the mutual fund or the insurance route or directly. So the depth in the mid-cap, small-cap stocks has reduced considerably. So whenever there is any adverse event overall in the market or in stock specific, there is hardly any support to many of the counters, and you see deep cuts in the prices of many of the mid-cap stocks. So this kind of volatility in the stock prices has obviously cautioned investors, and investors would prefer to remain with the larger caps and also stick only with the top-notch quality mid-cap stocks.
KK, at a time when just about every major global equity market is sitting at a historic high, Indian markets are massively underperforming global markets. Do you think that could be a challenge for us? Because I've often seen in the past that liquidity chases performance. The fact that Indian markets are underperforming global markets really could be a challenge for us, and this really could reverse liquidity?
You have hit on the nail as far as, I also believe the same, that the way the US markets are performing, and obviously liquidity chases performance. So what we have seen of robust inflows in the last few months, there is a distinct possibility that if the global markets continue to outperform the way they are, then this liquidity could slow down. So that's the biggest challenge that our markets are facing as of today.
So for FY14, what do you think will emerge as a clear theme, or which group do you think will emerge as a clear winner? Exporters, rate sensitives, or it has to be consumption?
As far as consumption is concerned, because of various fears on the domestic economy per se and the valuations of many of the FMCG consumption stocks, So maybe consumption related sectors, the stock prices may not give you any extraordinary returns. So coming back to the other two sectors which you said about export oriented and rate sensitive, the expectations are that in the second half of the year you should see rates coming off. So there should be a positive sentiment for rate sensitives. And again, there is a fear on the current account deficit being where it is, and if currency weakens further and it goes beyond 56, then obviously your export-oriented stocks should find a flavor with investors.
KK, what's your sense on the whole divestment drive? I mean, we've seen some successful issues from the government, and now it seems like it's RCF's turn. Does it seem like, this drive could actually be as successful as some of the recent cases have been?
I mean, RCF is, I believe, a very small divestment of maybe less than 500 odd crores. And so the sector, the agri-input sector is in flavor. And so it should get a decent investor interest. Currently, I think the FII interest or the mutual fund interest in that stock is very low. So, but from a valuations perspective, RCF is a decent investment, and I'm sure it should get a decent response.
So, at the current juncture, what would you call as a high risk, high return idea?
High risk, high return idea would be your public sector bank, because if you believe that there is a decent uptick in the economy, then they are the ones which will benefit the most, and the appreciation could be very high. But if you believe that in the second half of the year the economy could still further stagnate after the 4.5% GDP growth for last quarter, then the NPA problems which we have seen so far could accentuate further. And this is a sector where the ownership is reasonably, the domestic institutional investors are overweight in this sector. So again, they could possibly throw in the towel, and then there could be a lot of damage over there.
But KK, in general, do you still think that there is a lot of hope which is still there in Indian markets? There are expectations that Indian economy has bottomed out. There is a hope that things in next financial year will only improve. KK, hope is not a data point. The data points are suggesting that we've not bottomed out.
I think investors were generally realistic. Realistic and optimist, which is that after you have touched a low of 4.5% in your GDP growth number, it cannot just happen that in the next quarter you will be 6% or 6.5%. So it's going to be a slow and a steady recovery as far as the economy is concerned. So to that extent, people are optimistic that whatever measures have been put in place in the last 6 months and whatever measures are expected, so the economy will be moving up, but it will take time. And again, please remember that next year are elections. So people are also realistic as far as the fact that post August, September, you may not see any great policy initiatives. So whatever has to happen in the next few months.
So in terms of a data point, what do you think could surprise us on the upside, and what do you think could disappoint us on the downside?
See, on the upside, if you believe that crude, which is at around 110 odd now, and if that cracks for whatever reasons, then that's a very positive signal as far as we should be looking at. That's the biggest positive that we should be following. That's what I believe. And as far as negative, if interest rates, which all of us are expecting to come off, but if we see of late, most of the banks have been raising interest rates. And so the expectations on interest rates coming off, that doesn't come true, then that could be a very negative data point.
From the Nifty 50 basket, what are your preferred ideas?
See, some of the stocks which I believe can offer you good return opportunities are ONGC and Cairn India. I mean, both are basically plays on oil, and so the certainty of earnings seems to be very high, except for the risk you have on the oil prices itself. But otherwise, the valuations perspective, they give a lot of margin of safety, and if things pan out as per expectations, then these are the stocks which can give you almost 30-35% return over the next 12 to 18 months.
What is it that you're liking out of the pharma space? Because that pretty much seems to be trending the way IT has, holding out in a weak market.
Pharma is again, the challenges are in I mean, as far as the pharma stocks are concerned, whatever exposure they have to domestic, you are expecting a pharma policy in the next 12-18 months, and that could be very negative. So that's the challenge which is there. As far as ownership is concerned, pharma stocks, all the large cap pharma stocks are reasonably well owned by institutional investors. And in valuations, they don't leave much margin of safety. So yes, it's a good defensive bet, but to expect pharma stocks to attract incremental money, I'm not too sure.
KK, you also track Bajaj Auto as a house with a magnifying glass. In quick time, the stock has cracked by more than 200 rupees. The fact that the current account deficit is still large, is it time to still buy Bajaj Auto because they will benefit because of a weak rupee?
Yes, they will benefit to the extent of their export sales, but the challenges are in the domestic market where they are seeing stagnating sales or even some negative sales, and that's not only for Bajaj Auto but for the whole industry, whether it's the two-wheeler or whether it's the four-wheeler. And valuations are reasonable. I'm not saying that it's expensive or very cheap, but it's fairly valued. So I think the whole auto pack is basically reacting to the slowdown in the domestic economy and the resultant impact on the numbers.
So time to sell Bajaj Auto or time to still hold on to Bajaj Auto?
See, as far as, I mean, if you are already an investor, it's not the time to sell, it's just time to hold on. But if you want to buy into it, then probably you can wait for a few more months before you get more clarity on how the domestic sales are panning out, and then you can time your entry.
Okay, KK, good chatting with you. Appreciate you taking the time out and joining us today on the show.